Welcome back to another Deep Dive Explainer. Okay, today we are tackling an absolutely massive topic for anyone out there chasing that top grade. We're looking at IGCSE Accounting 0452, specifically the ultra-dense module of Incomplete Records Markup and Margin. And yes, we are completely aligned with the syllabus 2028 to 2030 updates. You know, from the multi-billion-dollar collapse of major crypto exchanges down to your local retail audits, mastering incomplete records, that is your ultimate key to unlocking financial truth. Now, I'm stepping in today with a dual perspective to give you the ultimate edge. I'll be wearing my subject specialist hat, kind of acting as your academic mentor to break down the complex theory. And then I'll switch to my senior examiner hat, becoming the ruthless evaluator to show you exactly where candidates lose points. This is your A-star masterclass. So let's get focused and jump right in.
All right, putting on my senior examiner hat right out of the gate here. Listen to me closely. Are you throwing away easy A-star marks? Seriously, too many students look at this module as just, another tedious record-keeping exercise. But that is a fatal flaw. Candidates constantly throw away marks simply because they lack the advanced technical methodology required to actually see the cause and effect chain. This module is literally the fundamental bridge between basic data entry and high-level financial intelligence. If you can't see the big picture here, well, the advanced marks are just going to slip right through your fingers. Okay, let's map out exactly how we're going to secure those marks.
So here is our roadmap to A-star mastery. We're covering 4 distinct levels to conquer the 2028 to 2030 syllabus updates. First, the core framework. Second, method marks execution. Third, the highly analytical AO3 evaluation. And finally, examiner strategy pulled straight from the vault.
Let's kick things off with Part 1, the foundation, concepts and terminology. You really cannot build advanced analytical skills without absolutely mastering the underlying terminology. And the transition to the 2028-2030 syllabus, it is notoriously strict. Cambridge requires 100% accuracy with modern international terminology. Using old phrasing is going to severely cost you. You've got to permanently replace outdated terms with exactly what's standard now. So use irrecoverable debts instead of bad debts, and use owner's equity instead of capital in those specific contexts. Speaking as your subject specialist, I literally cannot stress this enough. Memorize this modern vocabulary right now. It's the baseline for everything else we're going to discuss.
Moving on to the non-negotiable foundations. You have to fully grasp the duality of every single transaction and the strict application of the business entity concept. But the absolute bedrock, the accounting equation. Assets equals liabilities plus equity. I want you to think of the accounting equation like the load-bearing foundation of a skyscraper. If a complex transaction happens and that foundation shifts even a millimeter out of balance, well, your entire financial structure collapses. The equation just must be perfectly maintained at all times during the fiscal period.
Which brings us straight to the prudence concept. Do not overstate profits by ignoring potential losses. Sounds simple enough, right? But under exam pressure, students completely forget the cause and effect chain here. If you ignore a potential loss, say holding on to obsolete, damaged inventory at its original cost, you are artificially inflating your profit. This totally misleads investors and, frankly, destroys your AO3 evaluation marks. We've always got to analyze transactions through the lens of historical cost and absolute prudence.
Next up, we have the essential vocabulary required for complex, multi-layered business scenarios. We're talking accrued, prepaid, realization, and consistency. Mastering these terms is critical for both your exam and your coursework practical skills. Think about it. For your coursework and AO3 skills, you have to rigorously document the evidence for these accruals and prepayments. If you practically cannot trace a prepaid expense back to its source invoice, your records are functionally incomplete. You aren't just doing math here, guys. You are documenting reality.
All right, with the foundation set, we enter Part 2, the blueprint, executing for method marks.
This is where we deploy our advanced technical methodology. Now, the most crucial exam survival tactic you can possibly deploy is securing method marks. In the IGCSE examination, method marks are awarded for a visible, logical flow, even if your final balance is entirely incorrect. Let's walk through a complex multi-step problem. Let's say you're given a gross profit margin of 20%, but you need to find the missing purchases figure using incomplete records. Do not just punch numbers into your calculator. Write down the margin formula. Show the conversion from margin to markup. Explicitly write out your reconstructed trading account. Basically make your thought process blindingly obvious on the page, showing the examiner exactly how you arrived at your numbers step by step.
This logical flow has got to be visible in your procedural steps. It is an unbroken chain. Everything begins with identifying the correct business document, like, say, a credit note or a bank statement.
That feeds into the books of prime entry, which then structures the T accounts, balancing out into the trial balance, and finally seamlessly transitioning into the financial statements. If you break the logical flow anywhere in this sequence, the final statements collapse.
And right in the middle of that chain is the gold standard for representing the double entry system, the T account structure. We need to demystify this architecture. I want you to think of balance brought down as your starting line for the month and balance carried down as the baton passed to the next period. If you drop the baton here, maybe by placing the carried down figure on the wrong side or failing to bring it down below the totals, your trial balance fails immediately. This right here is the absolute heartbeat of your methodology.
But, of course, there are traps. Switching back to my senior examiner persona for a second, I need to issue a stern warning about difficult technical concepts and mathematical pitfalls. Take the discount trap, for example. Let's say a business offers a 5% trade discount and a 2% cash discount on a $1,000 invoice. Amateurs, they just calculate 7% off the top. But A-star students, they apply the 5% trade discount first, bringing the invoice to $950, and only then do they apply the 2% cash discount to that new total. Knowing this precise technical sequence is totally mandatory.
Now we escalate to part 3, the analyst, AO3 evaluation.
This phase elevates you from a simple calculator to a strategic analyst. When you see a current ratio violently drop from 2.5 to 1 all the way down to 1.1 to 1, calculating that drop is just the baseline skill. A true A-star student immediately identifies what this dramatic liquidity crisis actually means for the business's daily operations. When a metric plummets like this, you must escalate into high-level analysis.
So let's actively debate the cause and effect chain here. Why did the liquidity just vanish? Has inventory been massively overpurchased, locking up cash on the warehouse shelves? Are trade receivables defaulting on their debts? Or maybe cash reserves were completely depleted because of a sudden massive capital expenditure like buying new machinery. Under AO3, you are the lead detective piecing together a financial crime scene. The numbers tell a story, and it is your job to evaluate the why.
We also have to account for inter-firm comparison challenges. Comparing different businesses is notoriously tricky. I mean, imagine comparing a modern software-as-a-service tech firm using straight-line depreciation with a heavy manufacturing plant using the reducing balance method. You absolutely cannot compare their profits blindly without adjusting for how these differing accounting policies radically shape the data. Differing policies drastically alter the surface numbers, right? And a top-tier analyst always standardizes the data before making a judgment.
Crucially, you've got to look beyond the ledger to gauge the true quality of profit. To remember these non-financial factors under exam pressure, I highly recommend using the A-star memory hack, the mnemonic LRM. That's location, reputation, morale. LRM. The physical location of the business, its market reputation, and staff morale, none of these are captured anywhere in the double entry records. Yet they are absolutely vital for the business's long-term sustainability and return on capital employed.
Finally, we reach part 4, the vault, examiner secrets and strategy.
I am securing my senior examiner hat tightly right now to deliver some high-stakes insights directly aligned with the 2028-2030 reporting standards. Let's be ruthless about these common pitfalls. Do meticulously distinguish between revenue and capital items. Confusing these two fundamentally distorts profit calculation. And don't, I repeat, do not submit ledger accounts with poor handwriting. I'm serious, examiners are actively failing students simply because a balance brought down looks like a random scribble. If the examiner cannot confidently read your numbers, you don't get the point. We just do not have the time to decipher hieroglyphics.
Furthermore, knowing the theory means absolutely nothing if you don't visibly budget your time on the exam paper. You must align your effort with the weightage of each question part. If a section is worth 12 marks, deploy your advanced methodology, showing every single step of your logical flow. But if it's only worth 2 marks, do not write a novel. At roughly 1.5 minutes per mark, you have to target your time ruthlessly where the points actually live.
To wrap up this masterclass explainer, I want to leave you with a high-energy A-star challenge. Pause and think. How does incomplete records transparency directly impact stakeholders' survival? Remember our industry hook from the beginning? Whether it's a local retail shop facing an audit or a multinational crypto exchange trying to prove its reserves, the flawless accounting you perform dictates reality for banks, authorities, and owners. So, master the terminology, show your procedural flow, analyze the story behind the numbers, and please write legibly. Keep studying, keep analyzing, and I'll catch you in the next explainer.